10 plus years full-time trader. In 2008, I launched Hit the Mark Trading, which is a teaching newsletter with trade strategies. Well, in 2013, people said, you know what, can you do this on video? So we're doing this Monday through Thursday, video format, always looking at the right edge of the chart. So for example, we were expecting today's move on coffee, saying if it goes over 160, we're looking for 180. All right, you got that? So the yen, by golly, if the yen, today's a breakout day, a chart event. So this is what we cover in the nightly video, more of a position type for swing trading. Let me get rid of that. Now I have a total immersion intensive boot camp, one for swing trading, one for day trading. I've got various experience in stocks, options, bond, futures, not Forex. I prefer the CME futures for currencies. But everything I teach works on Forex, any financial instrument. I've got lots of indicator experience. You're going to see the one I use every single day. We're going to talk about that. I've kind of thrown everything else out. I've spoken at various trading conferences and provided numerous webinars for traders promoting what I believe and what others tell me, a relaxed, simplified trading approach. This is me. This is who's speaking to you. This is my home office. Good to have a nice, relaxing area to trade from. Okay. The way this works, let me have about 30 seconds to tell you what I do, and then I'm going to go straight into education and no selling whatsoever, pure education, a system you can start testing. I do a nightly video designed to teach people how to trade. My goal is that you become your own expert. So I will call trades, give you market perspective, right, that you watch and only practice on paper so you risk nothing. And this is the only way to take ownership of the process. So the newsletter reinforces your learning. Repetition is the key. And what we basically do is we look at the charts in an all-encompassing point of view of price action, price oscillator, linkage between markets. And this is all covered in all the work I do. If you're interested, every morning I send out Rooster Call, which is my trader perspective of what's happened the night before, the news that might affect the trading, kind of geared toward day traders. So this is free for 30 days. Just go to hitthemarktrading.com. You can sign up, okay? No worry, no credit card required. I just finished giving this Just Day Trade course. It's fantastic. We went over 6 hours. Extremely good. So if you're interested in the recordings, they're available. I'm not sure. I'll probably have another boot camp for position traders in 2017. I'll have a new day trading course in 2017. I only hold these about 4 times a year. That's it. But the recordings are just like being there. Now let's get on to our feature presentation. What is momentum trading? Momentum trading builds off a firm understanding of support and resistance, along with known areas price is attracted toward moving. Okay? We're talking about trading directionally up or down, riding the price wave rather than reacting to what might happen. And this is usually accompanied by a price oscillator. We can use this methodology for intraday or short-term holding over a few days or even weeks. Today is going to be about day trading, okay? Today is going to be about day trading. Now, the first thing you want to do is you want to determine the trend. So intraday trading is going to use a daily chart for big picture. And you use a short-term chart for tactical entries. As a general rule, the more volatile the market, the smaller the time frame. Now I'll show you a chart, one second. We keep in mind that markets move in three directions, up, down, and sideways. If the market is sideways, we are greatly challenged unless the range is large. Thus, it is imperative to find moving markets. This means for people that all they want to trade is ES, I'm sorry, but if you want to use trend and momentum, you're going to have to look elsewhere, because sometimes that ES gets so bogged down it doesn't move. Or, for example, Monday, I was in this trade and I'm telling you it took forever. Well, gosh, find something that's moving. Now, to identify trend, we're going to bracket price with trend lines on the daily chart and the intraday. And we understand this highly technical concept. Price will bang back and forth between the lines. So let me just get the AgenaTrader charts up here. And I want to check something real quick. 1 second here. This is a trade that we entered earlier, and of course it did nothing, it did nothing. Finally is moving, so happy to see this, okay? This is a program that automatically, everything I teach is all in this, it does it automatically for you. So maybe we'll have time to talk about that later, but it's good to see this thing working. It's a great deal. Okay, let me go back to here's the daily, okay? Now, what are we doing here? This 15-minute, 1 minute, 10 range. Let me get my daily up here. Okay. Goodness, I got a trade on, so that's covered everything up. Let me just try OCL. Okay. Unfortunately, this is carrying some of my arrows from the other charts. But what we would do here is quite simply, for the day trader, you're trying to determine what is the trend. And for me, I just view this as saying, well, we have no trend. We're sideways. Okay? So I would just like to box it up, and everything becomes more meaningful once we break out of the box, and that's all we're doing. And I've been writing in this rooster call for quite some time, that $50 seems to be the line in the sand, because every time we are below 50, they bring it back up, they bring it back up, they bring it back up. Therefore, breaking 50 is a big deal. Absolutely. Breaking 50 bucks is a big deal. So what I expect to happen today is if we reverse and go back over 50, guess what? They will run it all the way back up, probably into the middle of this box, okay? Because that's what they're doing. So you could say that this is not a market for position trader, but it's wide enough range, goodness, for day trading, absolutely. So, I mean, here's some of the trades here, 10 range bar. You can see where the arrows are. Not this one. That's showing you a reversal bar. Okay? But this is a great range for day trading. Okay. So all you want to do is bracket and say, well, I'm sideways. $50 seems to mean a lot because every time we go to it, we can pop back above it. And then you go to, say, a 15-minute chart. I do. And then what I want to do is I want to say, okay, what has happened on the 15-minute chart? What's happened overnight? Okay, and you just draw the line. Okay. So let's just see here. Once again, there's that magic 50 area. That's actually 50-40. But you know, you just see, okay, well, we're kind of sideways here. And then anytime you break up or down, it's an event. So then what we're going to do is we're going to wait for a move above the line, and that will become an event for, say, Asian European traders over there. And over here, an event breaking below the line is an event for U.S. traders. And now obviously we're going to be working off a smaller time frame. I prefer activity-based charts for tactical entry, but this is just a rough guide, And I could do other fancy stuff. You know, I could say, okay, well, this is another indication, because if I break a channel line, right? If I break a channel line, then that's also meaningful. Okay? Drawing lines is an art, not a science, but this generally gives me a setup, and it says, and for some reason, this has served as a resistance. In our business, resistance becomes support. Falling through it, I already know where price will go. And if we break down to 50, that's when the bottom falls out. And that's exactly what happened today. Now, we were in a trade today, and this thing went, it was automatic signaled off the program, and it had what we call the maximum favorable excursion, $800. Wasn't that something for 2 contracts? Nice. All right. Now, the thing you want to be careful about are the tight range days. That's what you want to be careful about. I'll just quickly go to the NQ here. Boy, this is a lovely 15-minute chart up here, I'll tell you that. I had a user error here. That's what this is all about. But this is a perfect example of something we also trade called market structure. So there's a good signal. There's a good signal. And that's without even looking at an indicator. That's what I love about the approach we use. Okay, if I were to take this into the daily chart, you can see, now this is a daily chart. You can imagine how challenging, let me get this. This must be to trade for the day trader. Okay? This is just absolutely awful. Now this is the first 2 weeks of August. Same thing last year. So just understand, if the big picture view, the daily chart shows a tight range, you must wait and let this break out. Indicators, I don't care whose indicator, will show you different fake outs. You must just visually wait for the breakout. When price is ready, okay. If price is ready, you're ready. If it's not, find something that's moving. Okay, let me get on with the presentation now. One moment. Understand that in day trading, support and resistance is absolutely huge, absolutely huge. And in momentum trading, it's like the goalpost. If we can identify support and resistance area, then it's like the goalpost. It's important to identify probable areas price wants to touch over and over again. Now let's talk about the use of an oscillator. Oscillators derive their movement, their power, right? Their power from price movement. So for this reason, you really need to understand how to read the price action at support and resistance areas. The oscillator then provides a trigger point for the entry. You know, it's interesting. When I give this boot camp or the day trading course, the first day we don't even look at any kind of an indicator oscillator. And by the end of that first day, I am sure I have convinced people they really don't need an oscillator, but obviously an oscillator makes us feel good, gives us more confidence, and then some are shown to be predictive, and I'll talk about that in a moment. Now this is what most traders look like when they're trying to figure out which oscillator to use, or they try to tell you what the best oscillator is out there, by golly they know. Do you remember the story about the 6 blind men and the elephant? Each one is touching a different part of the elephant, and they're describing what they feel, and they're so sure of what it is. The guy in the back says, oh, this is a snake, this is a snake. And the guy in front says, well, it's just like flexible tubing. Well, in trading, it might be the first guy saying, well, this MACD, it's the best thing ever. The second guy might say, no, it's market profile. Market profile is the best. I know this is it. So, I mean, bottom line is, take it from me. You want something that speaks to you, okay? You want something that you don't have to make a lot of decision points over. And in day trading, I really prefer my students clean up their charts and get rid of the 3, 4, 5 different indicators. A person asked me, well, you know, you don't use volume? And I said, no, I don't need volume. Volume is yesterday's trading. Certainly volume is important. Certainly. But it's all run by the machines now, so it's the price action that weighs the most significant. Now let's talk about, you know, everyone has their personal favorites. In the beginning years, I used slow stochastics, MACD, Williams %R, RSI. I probably threw the Bollinger Bands on there, right? And when you're at night, day trading, position trading, you've got all the time in the world to sit back, relax, and make all kind of analysis. But you don't have that. You don't have that time luxury in day trading. So at present, I just use one indicator after years of trading and my desire to simplify. So I use the Commodity Channel Index, also called the CCI. Now it's important. I want to be very upfront with you. In a strong momentum market, all price oscillators work, and I mean everything. In a tight range market, all price oscillators will lose their predictive value, and I mean all of them. So this is one more reason to monitor several markets looking for momentum. What is the CCI? It is an oscillator created by a gentleman named Donald Lambert. I met Mr. Lambert. In the moving market, CCI is shown to lead price. Now, do not take my word for it. You know, trust but verify. Check out what John Murphy says in his book, Technical Analysis of the Financial Markets. This is directly from his book, page 239. He spends maybe half a page on it. And all I want you to focus on is this right here. I'm trying to do my pen here. Okay, I can't seem to use the pen tool, but let me try the highlighter. Spotlight. Nope. Okay. Notice that the CCI turns before prices at each top and bottom. That's important. This is in print, right? Notice that the CCI turns before prices at each top and bottom. That's huge, okay? That's huge. By the way, if you have any questions, I'd rather take the questions at the end, okay? Let me just see this, move this over here. Ah, got it. Look at that. So this is really huge, okay? Just huge. Now what is he talking about? Well, we're talking about, notice that the price is going up, CCI says, I don't know, I'm loose. CCI turns down and price turns down. CCI is down here, we go up, price goes up. All of a sudden, we're going up here. So price is making a lower low, indicator's making a higher low. That's divergence, right? So the CCI is predicting, hey, I'm ready to go up. Up we go. Hello. Now, in a strong momentum market, the stronger it is, it's like you throw a ball up in the air. And that ball goes up, and then finally it starts slowing down and then arcing over before it comes down. Well, the CCI is predicting that. And so it might get you out of that trade too early. But we do have a filter we use to keep us in the trade. Don't worry. But this just gives you a quick and dirty about the CCI. It's really good. And this John Murphy, it is required reading his book if you want to become a chartered market technician. Okay? Good. I love showing that. It's a price oscillator. All you need to know is that we're comparing price with a simple moving average over a selected time span. Mr. Lambert suggested a 20-day period. Others have modified Lambert's suggestion for intraday using a 14, 6, and 5 CCI. Okay? Now how do you calculate this? Well, you don't have to worry about that. It's all done for you in the software platforms. You just define the period. I'm going to show you the calculation. You can study this on your own time. If I look at something like this for too long, my eyes will glaze over. I just want you to know that the CCI is plotted on a histogram. I'm going to show you this. The zero line represents major support and resistance. The 100 and the 150 lines represent minor support and resistance. Let's go to the chart, shall we? Okay, let's go back over here. And let's see. I think this will do. Boy, there's a nice signal. Look at that. Wow. Look at that. Beautiful. Okay, so we're talking about, watch me now, in the histogram. This is the zero line. This is major support and resistance. Major support and resistance. Red. This is the 100. Here's the minus 100. This is minor support and resistance, okay? Minor support and resistance. 150. Minor support and resistance. Minor support and resistance. In other words, if I'm strong enough to go through 100, great. Got some momentum. If I even go over 150, wow. Even stronger momentum. Okay? All right, let's go to if we like to say that we have the upward momentum after 5 bars, okay? After 5 bars, we confirm our upward momentum. And below 5 bars below, we confirm our downward momentum, okay? All right, one moment now. What I want to talk to you about today in using the CCI is the diagonal trendline break. Now it's the same methodology. You're going to adjust the CCI to 14 from the default 20 chart setting. Smaller time frames in moving markets with good range, and trade during the rush hour instead of all day long, okay? I mean, so many people make money in the morning and then they just lose it over this. If there's lunch, nothing going on, they just lose it. So you got rush hour in the morning and then you got 1 hour in the afternoon. So find the rush hour in whatever instrument you are trading. Now the diagonal trendline break on the CCI, you know, there's 4 other patterns I teach on CCI, along with other robust setups, filters, and nuances, but 50% of the trades are accomplished with the diagonal trendline break. Okay, so this information allows for immediate testing. Okay, immediate testing. The key point to remember is you draw a diagonal trend line starting at 150 or minus 150. Better trades are in markets showing momentum. 14-period CCI for intraday below 60. Now, what that means is, this is important, you are going to have a default setting on your indicator. And your default setting is 20 on the CCI. So if you're going to day trade, any time frame below 60 minutes, you go in there and you change it from 20 to 14, okay? That's what you do. And you'll be trading just like me, how I trade. Okay, it will take you time to learn it. Take you time to learn anything. 3 entry rules. Diagonal trend line break with the trend. Draw it from the plus or minus 150 line. Use a confirmation price bar unless the trend is super strong. Counter trends only after you have mastered trend trading. Now the protect to stop rules, I'll show you this on the chart, not to worry. If you're going to go long in intraday, place your stop below the trigger bar or prior price bar to the trigger bar, whoever's lower, and let it go long. Now you need to test this. And this will require, for example, if you use range bar charts like I do, an initial protective stop that may be higher than what you're normally using. Okay? So there you go. You got to find out, how does your instrument normally move? Okay? Some people will look at a stop that I'll use on crude, say 20 ticks, and say, my God, I'm not gonna risk 20 ticks. Well, you just test this and you see how wonderful this works. And I'll guarantee anybody trying to use 6 ticks on gold or crude or Russell 2000 or maybe the NQ is going to probably get their head whacked off, okay? You really need to take time to study how your instrument moves, okay? All right, good. I'm not here to convert anybody, but I'm here to advise caution. All right, let me go now to the chart. Oops, 1 second. All right. So what we're talking about here, let me clean up some of this stuff. That ES just not moving, just sitting there with a $100 profit, you know, just not moving, just hello, ES, lower than Christmas. Okay, let me see if I can, let's look at this bond chart. Bonds were quite interesting. We got a nice signal here, look at that, and up we go. Here's a good down signal there, wow. Okay, here's another up move here. Look, wow. Okay, 1 tick in bonds is $31.25. All right, I want to go where there's not so much drawn on the chart. Let's see here. Clean some of this up. Okay, now I'm trying to make it simple because it's your first exposure. We talk about drawing a diagonal trendline break from 150 or lower. This is minus 150 or lower. Or you're going to draw it from plus 150 or higher. So you just draw that line out. Okay, I'm trying to draw here now. Oops. So here's one, for example. You know you're in a downtrend. You see that visually from up here. Let's say from up here you see it. You're going down. We talked about looking at those critical areas on the daily chart. You broke through some. And so if you miss this move here, and you think, gosh, you know, I missed that, not to worry. You draw the diagonal trend line from minus 150, run it up here along the side, and you break that. And if you break it, it's an entry. See? There's our signal. So, oh, it's this one. He waits for confirmation. And so down we go. Okay? Now, if you take the diagonal trend line break and you want confirmation, so you probably got the signal about right here. And then you confirmed. In other words, yes, I feel comfortable about this. I feel like, yes, we're actually going to move lower. That's what the confirmation bar does. And since this is a 10 range bar chart, it moves quite fast. So it's not like you're waiting all day. It's not like you're going to lose anything. People always worry about, I got to get in early. I got to get in early. You know, nothing to do with that. You're going to get in if it's going to be a good move. You'll get in just fine. So your protective stop will go either the trigger bar or the bar above the trigger. Okay? And you do that on every single one, and you're going to be amazed at how it works. Now let's look at this one. Okay, that's about right here. He did not fire off a signal because he was already in, so he's, let's see, this is here. It looks like it was about right here, maybe. Let me see. No, it was this one. So there's a signal and confirmation. And you either put it whoever's higher, okay? What about over here? Can't really draw one. Here's one, draw this. Now, this is counter trend. Diagonal trend line break going up. So when you know you're in a counter trend move, and you know, do you really want to take the trade? I suggest you focus on trend trades first and then worry about counter trend trading. Let me see what I got here. Normal. Trying to make this. I'm sorry, I don't know why these appeared like this today. This is my fault. I'm trying to get rid of those. Let's take a look at something else. Gold. Oh, this is beautiful. Diagonal trend line break. Here's the signal. Let's see, about right here. Here's the confirmation bar. Protective stop is going to go here. And all this does is help the noise not to take you out. It's just initial. Obviously, as the trade moves your favor, you can move the protective stop up. Now, I have just on this one, this is all automatically done for you. It's a trailing stop. I love it. But some people want to move it on their own. So let's look at another one. Diagonal trend line break. And so here's our, let's see, this is a long signal here. Looks like it was about right here by the time it broke. Okay. And then it confirmed. There's other logic in here that calls these signals to go. I've got filters in here to try and filter out bad trades. So that's why this this arrow is a little over. But this would be our diagonal trendline break. And so your protective stop would go just underneath this guy because he's lower, and about 3 ticks or so, about 3 ticks. So he might have gotten stopped out here, might have. But not to worry, nothing is 100%. We know that, and look, here's another bus comes by to take you on your ride, and that's right here. Not to worry, okay? Absolutely. Absolutely. So again, your protective stop is just below the bar previous to the trigger, which is this guy. And see how you stay in the trade? Now that's initial. So this is going to be on gold 10 range bar, the way I trade, $200. Wow, $200. So initial. We expect trading momentum that the thing is going to move. We expect that. Right? We expect. So therefore, it's just an initial protective stop knowing anything can happen. But more often than not, it seems to work pretty good. And then whatever method you choose to follow the trade, I like it automated. I love it automated. It's less stress. See how, you know, it just perfectly let this thing go. He was stopped out right here. So anyone going to cry out that, oh, you didn't miss all that? I hope not. That's unrealistic. You're never going to get the exact end of a move, but you certainly got more than the heart, more than this. You had a nice stake of the trade right here. All right, here's diagonal trendline break here. Absolutely. So what can you do if you're already in a trade? What do? Add to the position, right? Why not? Where's stop? Right here. Whoops. Just under there, about 3 ticks. All right. Good. Now, one thing I want to impress upon you, and I got to keep track of my time. This is robust across any instrument, across any time frame, across any time frame, any instrument, relying on the fact that if an action repeats, we can trade it. It's that simple. If an action repeats over and over and over again, we can trade it. That's what you call finding an edge. This is what you want. Day trading, you use activity-based charts rather than time charts. It has been proven empirically to me, that if you try to use a 3-minute or a 5-minute, unless it's really a super slow day, you're going to be late. In an instrument that moves fast, you're going to be late. I think you need to have no-go rules. In my program you saw, gosh, I'm not interested if it trades banging around 200 to 250 and not moving. By the time I get in, it'll cut me up, hand me my head. So I must let price resolve the issue. Draw a box around it, wait for it to break. You try to look at oscillators and they're going to chop you up. Or moving averages can chop you up. So just be comfortable. Let price resolve the issue. Now, momentum traders believe they're in for the long haul, taking a series of trades, converting to cash quickly. Runners are for longer-term moves. Trade multiple contracts rather than pin your hopes on a single contract. Paper trade prior to using any real money, and understand your ego and your mind, right? Trade with the weakness in your mind. So, for example, today in the trade room, and I only have the trade room for people that took the course because I don't want people asking me, you know, why do you have this color for that indicator, stuff like that. I want people that have taken the course and they know what we're doing. So we have a trade that we entered on crude. Well, I'm kind of distracted. So on that particular trade, I decided to use targets because I'm switching between a lot of different instruments. Okay. it happened to be the absolute beautiful trade of the morning, right? Just beautiful. But I tell people, the only person who's concerned about how much money you make is you and your brain. So understand that. I think with trend and momentum trading, we can achieve very good trade runs. And it's excellent to have tools, which I love that protective stop I showed you earlier. But if there's a person who only wants to make 3 ticks, for example, and all they make is $30 out of a maximum 800 possible, I still believe whoever made $30 is a winner. Anytime you take money out of the market, you're a winner. Now real quick, day trading mind, fast action, fast profits, or fast losses. That's it. Fast action, fast profits, or fast losses. You must react. You've got to trade with clear charts. You linger, you miss the trade. That's it. Day trading is not position trading. Don't fall in love with your position. Okay? Be aware, be focused. The focus on day trading is knowing that you have a trading edge over time. It's never about the result of an individual trade, never about the result of an individual day of trading, never the result of a week of day trading. So you've got to practice on paper and simulation. You've got to have, I would say, a minimum 3-month period to look back. You can go back in time and just say, okay, I'm going to look, in 3 months, what would the system have done? And then try to actually take the trades like in a tick replay or something. What I want you to do is build some type of a personal record. Don't just look and say, hey, this is great. Test it out. And understand that all day traders will experience drawdown if markets simply are not moving. 2015, first 2 weeks of August, I had drawdowns in equity index futures, okay? Absolutely. This year, I was ready. Only trade gold and crude. Now, I want to show you this. This is the SPY. This is an older chart. And what I want to focus on is, let me get my drawing tool. This is SPY. Now, just look at the range here. 108, 116, an 8-point range. So in the futures, that would definitely be tight. In 2005, the range got even tighter. And let me tell you, I traded during this period. It was absolute hellish. All the action happened in the overnight market. I had a guy come visit me twice, and we simply sat the entire day without taking a trade. So, one more reason to understand markets move in 3 directions. They go up, they go sideways, and they go up, they go sideways, and then up. I mean, right? 3 directions. If you're caught trying to trade something like this, I saw a guy I hadn't seen in years, and he just, 2005, this got him. The market too tight. So you've got to really appreciate what you are trading, and if it's not working, expand your horizon, okay? All right. Let's see. I think we're almost finished here. This is a numbers game. It's no different than a guy playing professional cards. They sit at the table, they know their system. It's not one hand that matters, it's not 5 hands. It's a series of playing the game over time, and that's when the edge comes out. That the entire Las Vegas was built on an extremely small trading edge. You've got to understand, as a day trader, you're doing the exact same thing. You have an edge, and the entire game is not about a day's trading, a week's trading. It's a larger sample size. Got it? If you sit at the desk every morning and say, hey, I'm going to make $1,000, or, you know, I'm trading one contract, I'll make $1,000. I might make $2,000. That's unrealistic. Experienced day traders know that we're the mouse under the banquet table looking for crumbs during the intraday trading noise. That's what we do. Intraday trading runs price up and down. The day trader has trend and counter-trend trading strategies capturing these moves. Yesterday, that trade I took that took so long, an unbelievable time, it was a counter-trend trade. The more you trade, the more your system has a chance to prove itself, as long as you are able to trade the plan as perfectly as possible. Now, one thing I love about this system that I'm not really talking about it today, but if you look at this over here, see, the signals happen. I've got it where it makes a noise, right? The signal happens. I look up and say, okay, yeah, I like it. Boom. And then it takes over. Protective stop in there, trailing stop, and now I can do whatever I'm doing, writing my morning rooster call. In fact, I took a crude trade this morning while I'm writing the rooster call, and it's easy. As long as I agree it looks like my setup, boom, I'm in. How easy is that? How simple is that? This is what it's all about, making your trading easy, easier. Okay, it's a tough business. You got to understand yourself. How do you react when the trade looks really, 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 really strong? Do you move your profit targets, or do you follow your plan? You know, what do you do? If the trade suddenly moves strongly against you, how do you feel? How do you feel? Most people fail at day trading because they forget to think like an elephant. An elephant gets mighty big eating peanuts. And the day trader is capturing a series of trades, then leaving the game, waiting for the next trade. That's it, even if you missed the trade of the century. So the question to ask, can you quit while you're ahead, or do you just need one more trade? Do you have to sit in front of your computer all day long? I refuse to do that now. I refuse to do that. I want to trade the mornings only. That's it. That's me. How good does it have to get, right? There's a life outside of the trading room. So just remember, the longer you sit there, there's a potential that you become sloppy. And the professionals are living to take your money. So in day trading, gosh, if you make $200 in one day, walk away, 5 days, that's $1,000. Nice, right? So 4 weeks of this is suddenly $4,000. Wow. Now that's the lure of trading, but once you start trading, suddenly the mind becomes the enemy. The mind becomes the enemy. So you've got to be aware of the mind games. And I believe making your trading as mechanical as possible is the key. Now, people will blow up when making money because the money comes too easy and you lose self-control. You've got to trade as mechanical as possible, executing your plan as perfectly as possible according to your plan. That's it. This is not trade by the gut, shoot from the hip. No, no, no. Now you start with a small number of contracts and you build regardless of your sample size. What does that mean? That means if you've got $50,000, you start in a small amount. And you prove that to yourself. Okay, you prove it rather than suddenly saying, hey, I can trade 10 or 20 contracts. That's really quite immature as a trader, isn't it? So you tell your broker, if you have a problem, you say, I only want the ability for trading, X amount of contracts until I tell you otherwise. And then I just want you to shut me down if I lose a certain amount in the day. Okay? Your broker wants to help you stay in the game. So ask what tools they have to keep you from financially harming yourself. Or what I like about the Agena is that the money management is built in. The more you make, the more it allows you to trade without even asking. It will say, okay, you're doing great, we're adding a contract, you've got the money. Or it says, okay, you've run some account down, we're going to cut you down, you're not going to trade as many contracts. I like that. I like that. And if you ever tell the broker, look, set me up with $1,000 loss, that's it. You got to understand, if the market's moving fast, they cannot be held responsible. You got that? So we buy into the idea of financial freedom, and it's all marketed like that. But the truth is, this is a very tough business. Chance favors the prepared mind. So you control your mind, or you absolutely must stop trading. I'm running into the overtime here, so I probably will take some of this into the next session. Are there any questions? I mean, it's great information. Are there any questions? Any questions? Any questions? Gilbert, I forget, this is a 1 hour deal today, or are we doing more than 1 hour? Let's see, questions. How do I get the questions? Show hands. Let's see. Where are the questions? I do not see the questions. Questions? Okay. Are there any questions? If there's questions, help me out here, Gilbert, because I don't see the questions.
Can you hear me?
Yes.
Okay. No questions so far. The only questions if the session is going to be recorded. And yes, it will be recorded. It seems you made a very excellent presentation so that everything is clear for the whole audience.
Great.
Yes. So yeah, if there are any questions, please don't hesitate to put them into the question board. Otherwise, if nothing is coming, yeah, I would like to say thank you very much for your great presentation today again. It was very informative. Are you already through, or do you still have something to add on, Martin? Not that I'm just interrupting you.
Well, I want to mention that if anyone is interested in this AgenaTrader software and the add-on that I've created, we have a gentleman going to talk about this on Wednesday, and it's also how to get started using AgenaTrader. And I think that it's going to be a great session. It's a wonderful introduction, and I think we can send the link out to all registrants in case they would like to attend. Beyond that, I appreciate the opportunity, Gilbert. Thank you very much. And I have another presentation scheduled for, I believe it's November 1 at noon, or maybe 1 o'clock. And then on the 8th, I'm going to talk about correlation and linkage. I think that'll be a great session as well.
Yes, this is basically because we have created a webinar series, more or less. So all the attendees will be informed about this further upcoming webinars from you in, I think, 1 day before and then 1 hour before the event occurs. So I think everybody who is here will get the information anyway via email. And yes, we would like to see you in the next session. again, where you present again very extremely interesting information again about your trading style. Martin, many thanks for your presentation. To all the audience, I would also say, would like to say many thanks for being part of this presentation, being part of AgenaTrader, our webinar. And yes, I would like to see you next time, I think 1st of November, with Martin and me again. Martin, many thanks and goodbye.
Thank you very much.
Thank you.
Bye-bye.
And goodbye to all in this webinar. Thank you. Bye.